Good evening, everyone. Welcome to our weekly market overview where I help prep you guys for the week to come. Quick disclaimer, anything you see in this video is not financial advice. It's merely for educational purposes. And let's get started. Alright, so first and foremost, my favorite thing is we're going to start at the weekly SPY candle here. So, technical difficulties already. Starting at the weekly SPY candle, the only thing that is a little bit worrisome for me is currently the market has opened on like a gap down. So I think SPY is sitting somewhere like around the 550-ish area right now, 554, 553 area, like somewhere around this area. Currently it opened. But you know, it's pre-market before open tomorrow, so I mean that gap can easily get filled. If not, we can continue pushing forward downwards, but just to mention, we are opening somewhere like just underneath here, like in the bottom end of our previous 2 weeks ago range. But first thing we look at is our weekly candle. So our weekly candle here, one is the whole body of the candle pretty much took like part of 1 week's and 2 weeks price action with it in one fell swoop. So what does that mean? That just means it's a bearish engulfing candle, right? So we engulfed 2 weeks worth of price action, nearly 2 weeks. We still have a little bit more room on one candle, but depending on how low we got here, we might be engulfing the whole candle. But at least for last week, we've engulfed all of last week's positive momentum, which is sort of kind of what we expected. As far as that last week, we were looking for like some upside, and it was slowly starting to building. We were like somewhere in the midpoint. And we were looking to see if we can claim like the 200. I'll pull up the EMAs and all the other drawings here in a second. But we were looking for a little bit of a push. And then we wanted to see some figures around that range. So now with us engulfing the previous week's range, it gives us a little bit more confidence on the bearish sentiment, especially with a rejection of the 200 SMA. But with us having this deep pullback here and then opening also on a gap down, any relief bounce, it's going to be a little hard to judge where it goes. I would ideally like to see a rejection near like the 561 area, somewhere around this midweek, the previous swing rejection high low, and then break above for the upside here. So around like the 560 561 area, like a bounce and reject here around that range would be something I would be looking for. But let's go through the week and kind of take a look at some of the other levels that we have here. So
hey, Smooth.
Yes.
Is your screen showing?
Is it not showing?
No.
Oh, I mean, it shows it for me. You want me to restart it? I'll start it real quick. There we go. Worked?
Yeah, thank you.
Okay. All right. Sorry about that. So you guys, I'm guessing, didn't see anything when I was showing before. Let's go ahead and look at it again real quick. So yeah, I was just mentioning about this previous week's here candle, our weekly candle, engulfed our previous price range. It actually engulfed, you could say 2 weeks worth of price action, but in reality, we really just covered this, and we still have a little bit of room left for the previous weeks. We did get the push up near here, which is around 572-ish, 573. We managed to go a little bit higher, but we did kind of expect like a little bit of a look above near our 200, but we needed to see the confirmations of like a failure near there to confirm like a downtrend or a change in the overall trend on the weekly. And we started to see that a little bit. One thing I want to say is right now that the fact that we're opening down a little bit at a gap up, especially with such a long push down. Like Friday pretty much closed out the week. I mean, it was something that we were considering last week, but for it to actually fill the whole week, previous week's range, is quite some downside, and especially with a gap down, I could see a little bit of recoveries happening sometime this week, if possible. We can still continue going down, but if we do have some recovery, I would look for like the 560, 561 area, right here where our previous swing high, reject, and then confirm above for our weekly trend here. So this was our area for our previous weekly trend failure. We started to get that 2 weeks ago, and then we had that relief bounce here. So now if we start to break below and any bounces starts to reject around that area again, then we can have even further confirmation for any other downside. And as far as downside targets, what I'm looking for is possibly somewhere around this range here. If we do have, any downside here on SPY, a possible range that we can head towards here is around the 524-ish level, 525-ish. That's a decent target that we can look for any further downside. But once again, we're gonna need some like stronger confirmations on the way down. But as far as a push down that far, we would really start to need to lose like this area of a previous bounce around 540, and then there's a little bit of thin structure here. What that would give us that push down towards the 524-ish, 525 level. So if you're looking for like, where could SPY possibly have its downside, I would look for like 540, 543. I believe I have the level. I'll pull it up in a second. But 524, let's go in the middle here. 524.75 would probably be a good target for any continuous failure on the weekly trend, right? So we still have to, I ideally would look for that 560 through 560 150-ish level. A rejection around that range will give me further confirmation for like a target like this. Now let's look at our weekly trends here. So last week, can I make this smaller? Okay, no, I can't. Okay, so last week we were looking at a few things, and so I'm sorry there's like 1,000 lines, but try to bear with me. But one thing we were looking at was, one, we had this downtrend on the weekly. We identified more of like a pullback rather than negative downtrend here. And on QQQ, you see that we created more of like a selling pattern here. But on SPY, we didn't really get that yet because I wanted to see some rejections near the lower bounds of our range. So we had a few rejections here. Once we broke above, we never really got that rejection around that range. And that sort of sits where our 200 moving averages, simple moving average. I don't know why it's not here. I'll pull it up in a second here, but it sort of falls right around here near the 38.2. So last week we were looking how 2 weeks ago we had a huge flush and it picked up off of the 61. That's not necessarily a huge indicator that we're going to have a bounce, but if it wanted to have a bounce, this was a good area. That's something we mentioned about 2 weeks ago. And then last week we closed over the 50 here, which gives me a little bit more confirmation that SPY wanted to grab that 38.2 level, just because it coincided as well with the 200 SMA. And we were starting to see the 20, and let's pull it up here so I can have it on the chart. All right. So last week we were right here, right where our 20 and our 200 kind of started to touch. We noticed on like the QQQ chart, the 20 did start to break underneath the 200, but on SPY we were kind of just sitting there right in the middle. So this week we did get that retest of the 200, slight look above, and then ultimately fail, and our 20 started to curl right underneath our 200, right? So our 200, I'll draw it in pink, somewhere around here. So now we're starting to get that curl down, and kind of confluences with our look at the 5 SMA last week, with it curling up a little bit, giving us signs of like a short-term push up, right? So we got a few clues as to like where the market wanted to head. As far as downside, I don't personally think I could have expected us to retrace this much. But we definitely did get that rejection and that hold under the 20. So that's going to be something we're going to be continuing to look at least week after week for now. Because I want to see continuous rejections of the 20 underneath the 200. Because this is important for like a bear market, right? Not saying we're there yet. We're still kind of, last week was signs, this week is somewhat a little there, but further confirmations would be continuous rejections at the 20, right? So if doesn't matter if the 5 SMA creates a short-term upwards trend, we continue to reject at the 20 and it remains underneath the 200. That's going to be our indicator for a confirmed entry into the bear market, as well as if we continue to hold underneath this 561 level, which is our 50% retracement on this our previous upwards momentum. This is from August 5th, which was our initial sort of crash in the market with we were having a huge uptrend, and then with the CrowdStrike hack, we had that huge pullback in the market, and eventually we recovered, and since then it's been on a consistent uptrend. So now if we see a failure near the 61.8, which we did see 2 weeks ago, and a little bit last week or the week before, but this week with us retracing pretty much that entire move, rejecting at the 38, and also at our 200 SMA, any continuation that's underneath the 561 area, 561.8 or 560, I would say, if we start to reject near there, then we would have further confirmation of that failure to uphold the weekly trend, right? And then we'll know that the weekly trend has failed. Not necessarily that we're completely bearish. I mean, we're showing very strong signs of it, but it will confirm that our weekly trend has failed. So let's see this week if we can have any upside that will reject that 560 area, to give us confirmation for the weekly trend failure. And then as far as our level here, and this is sort of where I was getting that 5. It's actually our weekly pivotal low. Some of you that are fairly new here, anytime I give a weekly pivot low, you'll see it whenever I post my levels at the end of this live. I usually say bearish under or bullish over. That's usually just an indicator of overall at the end of the week. So at the end of the week on Friday at 4 p.m, if we're underneath 443.61, that is bearish, period, right? If we're over, my strong highs here is 561.80. That's gonna be, I would lean more bullish neutral, but typically any price action above or below that closes on Friday at our weekly pivot levels, kind of give you an idea of the overall trend that the market's in right now. So previous to this, our strong pivotal point was somewhere around 584 towards the upper part here. So with us maintaining price action below it, it was just confirmation that we were still on a downtrend and that we weren't looking to change the trend just yet. Then another thing that we mentioned last week as well on the weekly here was on our push up here, I kind of drew it out, and it's not perfect. It's never going to be perfect, but I was looking for an uptrend to develop around here as a recovery from the 3 weeks of continuous red. We didn't get that. So with last week having that closure above the 50 is where we drew out this small uptrend channel that we have building out. And I mentioned last week that if we can hold over it, test the 38, we may get that look above and fail, but as long as we remain inside this range, it'll just be bear flag consolidation until we break out of it. this week we kind of went to the upper and lower bounds of this, and we're opening underneath it. So I'm curious to see if we hold that when the market actually opens. But this is pretty much your bear flag breakout, at least on the weekly. This is something that we were waiting for like at least for like a recovery bounce here. So we finally got that. Now we just want to start seeing price action hold under here, and then we can actually look towards those targets, especially on the lower bound where I mentioned around 524 and the 543 area. So yeah, just wanted to mention that we finally got that bear flag that we were looking for. We didn't get it fully drawn out here, but this week kind of gave it to us, which was pretty nice. So let's go on to the daily now. I'm gonna go ahead and turn off the drawings for a second here. So with the daily, we have a few things that we can note here. One, so we did get that on Monday. This is Monday, I believe. Monday, Tuesday, Wednesday. Yeah. So this is Monday. And we did get that test of the 200, right? This is our 200 daily simple moving average. We did get the test of it. We got the slight look above, and any rejections here, our last line of defense was actually supporting at that 20. Okay, so the 5 was just confirmation of our changing the trend short term, as you see here where we started to go over the 5. So we had a short-term change in trend, which I mentioned last week, and we were slightly below it. We did get that gap up, which was nice, to give us that test around that 572 level. It's a little higher now, but it was at 572, 573 at the time, and we were looking for a test of this, a look above possible, but we wanted to see a support near the 20. The 5 is going to move, with price action, as it's going to go week by week. But our main thing was we wanted to see the 20 hold up price, right? So if we had some sort of bounce here and continued to make our way up, that's where we were looking for, like the 584 confirmation for like any other upside. But we didn't get that. We had, in fact, on Thursday, we actually got a break underneath our 20 and are also under our 5. So it was like a strong rejection near the 200 that just kind of gave way to every simple moving average, which was considerably bearish. Was not expecting us to like flush in the way that we did, and especially with Friday, we couldn't even make attempts to get near any of our SMAs. So we were underneath our SMAs all of Friday, which was just inherently bullish and bearish. And another thing that we note as well is all of last week, that little consolidation that we had, that final change in trend that we were looking for, which was the break over our 5. We had 560, 558 level here, where we're kind of looking for a change in trend over the 5 SMA. And in just a single day, we kind of retraced that entire move, right? So we gave back all of those gains, but in the process of that, we got the confirmation of our 200 rejection. So now we want to just start to see continued rejection at our 20 for the daily. So I mean, there's not too much to say about the daily, but I do want to see continued rejections, like I said, and especially a rejection here near the 560, 561 area, right? That's right around here. That's where we kind of had that look above and fail and chop around. So there's a lot of value here, right? It's kind of what gave us that little bit of a push, right? Sellers were pushing price down, but buyers were refusing to let it go below. So we had this strong selling pressure, especially with the end of the week. It just added to the momentum on the downside. So now when I say that we're somewhere around here, and I want to see a little bit of a relief bounce, right? Because we have this strong selling that's happening here. So a little bit of a relief bounce can be expected, especially if it starts to break our trend, right? Our downtrend here. Ooh, I didn't even know I could draw a box. Okay. As long as it starts to break our downtrend, um, this is where the slight fake out, I would say, would happen, where we're starting to break out of our selling and we start to push towards that 560. This is a good area for us to have that rejection confirmation. So I'm looking for that one once again on the daily to see if that actually does take place there, because that would be a stronger confirmation for our pushes down. Let's see if I have any drawings here. And there we go. I have the channel draw out here, which shows our very strong selling pressure. Down here is this blue channel here. So I wanted to see if we maintain this. If we do have a break out of it, we can always test that 560 level, like I said, and get a rejection near that area. Even if we have a single daily candle that kind of looks like this, and then the following week we'll have continued downside, creating another selling channel. So I'm curious to see if we do get that slight break out of it, especially if we start looking below, like around this area here, and starts to push out of it. It would, you know, give you that that liquidity grab, right, where we're grabbing. We needed to grab a little bit more liquidity in this upper bounds of this range here for another push down. So let's see if that's the case this week. And this will be the selling channel that I'm watching. See if it holds. We can also just kind of, as we're opening below here, we can also just have another daily candle that sort of pushes us down towards this 543 level. So that's another thing that I was mentioning. The gap doesn't necessarily have to get filled, but if we do get a gap fill, a push near this wouldn't be out of the way. We would also have our 5 catch up quite a bit. Our 5 would be right here, would lend us a hand in that continuous rejection around that 560. So I would like to see us bring down the 5, at least for now. If it's a temporary rejection, we may, you know, continue having it break down and then we can have candles over it. But we want to see the 5 starting to catch up here. That's going to be, I'll make it yellow. I want to start seeing the 5, which is our yellow here. I want to start seeing that catch up near this area and give us stronger rejections for the downside. Alright, and then as far as pathing here, I'm going to keep it simple since we're on a really strong downtrend here. This is kind of the pathing, so I have a few little outcomes that could possibly take place. So last week, let's kind of take a look at last week for 1 second. So last week we were looking at our this was our bear flag pattern on SPY, right? We had huge selling for quite some time, pushed down, and we were looking for a structure to build out inside of this flag, right? So unfortunately, I was looking for like a head here and some shoulder around this area. We didn't necessarily get that. I mean, you could try to look for patterns where, you know, if they're there, you can look for a cup, but I didn't really see a perfect pattern play out. Sometimes it doesn't always happen, right? We just kind of gapped up out of the range here. So we didn't get like any sort of significant pattern to break out here, but we did get one, as we mentioned, our bottom end of our flag here. We did finally get the break out of it on Friday. We closed below it, and once we closed below it, we started to lose that 561 level, and I just added to further downside. So I'm curious to see where we end up. Like I said, we could still be somewhere in this channel here. We might get one more push out of the range to grab a little bit more liquidity, because we have enough volume in this range, but we kind of just like pushed right through it, right? So if sellers do want to push it further down, it's not out of the woods for them to get a better entry towards the 561 area, which is our weekly failure of trend. So it's not out of the woods to grab some liquidity around this area and start to push down. And that's kind of where I get this orange channel here building out. So this is kind of a recovery out of this deeper pullback we're in right now. So I drew one out right here. This one is kind of no man's land for now. It's not concrete. I just drew it out just in case because I wanted to show you guys a few things that can happen, right? So we could get a sort of a pattern that looks like that, where we have that look above near a 561, continuing to reject and hold inside of our channel, give us a little bit of a head and a shoulder, and then break down. That's one possibility that we can look for. Another possibility that can happen, especially with us gapping down, is actually creating the opposite, right? So we'll have more of a head and shoulders pattern, inverse head and shoulders pattern, bringing us near that 560 area, keeping us inside of our selling channel here, and look for a rejection here. We might get that Friday push straight down. Once again, similar to last week, right? So that's one possibility. Like I said, one thing I'm going to be looking for, and I'll definitely mention it in my channel, is as I see it develop, is just to kind of see what kind of recovery we have outside of this range, right? We can even gap down, we can open here, but there has to be some type of recovery that takes place here. It may not happen on Monday, it may happen on Tuesday, but when we do have that slight recovery, it could start taking place here, or it can open right here and we start pushing back up near our 568 level, 561 level. So I'm trying to see this week to see how strong of a recovery we do have, because if we do gap down and we start to push back, fill that gap, there is still the likelihood of us pushing in, supporting at the 561 level, and then starting to make headway towards our expected highs, which is right around here, 570. So that's still a possibility. I'm looking more on the downside. Looks much more I don't know why I drew it like that. I'm looking more on the downside, with this being kind of the outer bounds of our channel here. So if we do have a break out of it, this is where I'm looking for the sign for a slight recovery, is the break out of this. And then a break out of this is also very possible. Doesn't necessarily mean that we would be going up, right? It could just be another rejection near the upper bounds of this range, where we had several rejections here, right? We have 1, 2, 3, 4, 5, 6, right? So we're continuing to reject around this 568, 570 level. So it's not out of the woods to create that upwards of momentum. Even if we have a push down, like I said, we can still create that inverse head and shoulders to kind of, I didn't draw it properly there, but hopefully you guys get what I mean. That inverse to kind of push you towards that area to get the downside. I'm not looking too much for any upside. Like I mean, it's very possible, but that's not kind of what I'm looking for here. I just really want to see this, our buying, seeing how much it builds here, and see if I can identify any structure that builds out in this range. So that's one thing I'll be looking for. And then let's go to QQQ. Once again, let's start at the weekly here. All right, weekly on QQQ. Okay, so first and foremost, with our weekly candle, we've had this similar thing that happened with SPY, where we were engulfing the previous 2 weeks of range. In fact, we didn't get the rejection near our 200. We were fairly close, just like a few cents off. It's still not out of the woods for any upside to kind of confirm that, right? We can have like the 200 start to curl around here, and then we get the rejection there. That's totally possible. But we do have another engulfing candle taking out our previous week's range, as well as, unlike SPY, QQQ did have that push underneath the 200 here. We didn't get the clean rejection. I mean, it's still rejecting to go higher, but it's not as clean as SPY. But we did have the 200 starting to curl underneath, and we did have a rejection near the 20 on Friday. So if we continue to reject near the 20 here, I'll put it in green. continuing to reject the 20 here, it's going to confirm what we were mentioning before. Any price action that rejects the 20 and holds underneath our 200 SMA is going to be inherently bearish, and it's going to provide us with further insight into possible bear market, right? All right. And then as far as our patterns here on the weekly, our little channels that we build out here, we're back in the bottom end of our selling channel here. Once again, similar to SPY, we were looking to see if we can identify the bear flag that build out here. Once again, we did get that with the slight look above. We didn't get the full 200-day rejection, but we did identify a range, and it's quite interesting how we have one candle that built that range. We were looking at it last week when it was just this candle, so to see us engulf, reach the upper bounds, engulf, and then also support near it, give us further confirmation of continuous downtrend and confirmation of the flag that we do have building out here. We mentioned last week as well that we're in a strong selling, and it's very likely that we would break out of it to test that 200. Once again, we did get that. So I'm curious to see if this week, similar to SPY, we start to break out of this range, and either we continue to push down on a slow grind down here on the weekly, or do we get a full flush underneath here, breaking our pullback channel on our weekly uptrend here. So we did have the failure of the weekly uptrend, which is around here, the 480 level. So similar to SPY, I do think the similar situation can happen here if we do have a little bit of a push out to recover out of this range. A rejection near the 580 level is not out of the woods for us to continue down towards the bottom end of our range. What I'm looking for is confirmations underneath the 464 level. So starting to confirm underneath there is going to be like a very strong confirmation, not only of a failure to continue a weekly trend, but also now leading into a new trend, right, which is going to be our new bearish trend. We're going to have selling similar to that, like I just drew out there, continuing to hold and pushing price down, right? SPY, our target was near 524 for QQQ. I'm not looking too low. I'm looking more on the 450-ish level. We could go towards like the 540. I think I have it here, but I can't see it. 546.70. That was my major level, which is pretty much nearly most of our retracement of our weekly uptrend here. So looking to see if we start to hold over there, and once we start losing this 440 level, it's going to be pretty rough of a road. But I do see a little bit of recovery here, and hopefully we get that rejection near the 480 level here. So now I'm going to, let's go to the daily here, see if we have anything we're building out on the daily. All right, on the daily here, similar to SPY, hopefully this kind of like helps you guys visualize the similar patterns on lower time frames. So you notice on the weekly, the flags is very similar, but it's slightly different. It's playing out much differently on the daily as far as the weekly, because with the weekly it seems more flat, right? But on the daily it's much more of a bigger range here, and then we start to see that confirmation of a rejection near 200 once again, starting to reject. This is the thing I was mentioning earlier with QQQ. We did have a rejection near the 20 SMA, and our 5 continuing to hold down. So unlike SPY, where SPY kind of had that just a huge push underneath and we held underneath, QQQ actually did get that strong rejection there and continued to fail. And once we broke out of our flag here that we identified last week as well, that was a further confirmation for more downside. Friday was a little bit of a odd kind of day, but with these confirmations, really what you were looking for was just, I guess, to short the highs. Simple as that. It can be a little bit tough when you start seeing price like chop around and continuing to just flush, but that's why we try not to rush into too many things without too much without strong confirmation. One of those is going to be definitely the break of the bear flag here. That was that stronger confirmation for further downside. Now, as far as our daily chart here, what am I drawing out here? Similar to SPY, a smaller uptrend that we can be looking for, similar to that, is something similar to this, right, where we have a little bit of a push up to recover, even if we start to break underneath the range. As I said, this line is not necessarily going to be set in stone. We can actually start dropping it near here. I just want to see how Monday opens, because if we have Monday gapping down around here, and then we start seeing some stronger buyers stepping in, then we know that we can drop this line to somewhere down here or wherever price ends up falling. But our upper bounds are going to be the same right around here. So either way, however the bottom end of the channel is going to be, we definitely want to see a recovery here. And once again, looking for rejections around the 480 area here. So let's just drop down to the weekly quickly here and kind of just draw out kind of what I mean by that. All right. What I mean by that is we can have a little bit of push up here, create a little bit of a head, make our shoulder, our head here, and break out of this range here. The reason that I have this, I know I drew it terribly, but we have this area here with large volume. So not only are we on, if I just draw it in green, let's do it that way so you guys can see. So we kind of had an upper bounds channel here, and then the lower end of our range is where we kind of closed near the lower end of our range here. Around the center point of our range is that 578 level, right around here. That gives us a little bit of it doesn't necessarily have to be at that area. That's why I'm just building out this buying channel to see how it turns out. Looking for some stronger rejections around the 478, 480 level. Pretty much a rejection in the center point of our volume, of this overhead volume here, right? Because most of the volume is going to be in the middle. It's our point of control. This is where the most buyers and sellers are both settling, right? We have sellers pushing it down, and we have buyers pushing it up, and we're kind of settling in this range. So there's enough significant buying and selling volume, enough price action here for a rejection to lead to very strong downside. So we sort of got it at Friday, but it's not out of the woods for us to once again get that slight push up and test. Even if it's just the lower bounds of that area, doesn't necessarily have to go the straight 480, 475 area, around the lower bounds of this range. A nice rejection here is going to give us much more downside, especially towards that 464 level here. And any continuation, especially any weekly holds under here, is going to be stronger confirmation of any bearish downside. As far as upside, the thing with tech is what's very possible is sort of, this is where I'm getting the 480 level, right? The thing with tech is we can continue having this nice push down, and it just takes truly just one catalyst for tech to have a nice V-shaped recovery, right? And what I mean by a V-shaped recovery, I don't mean that it's gonna give us the recovery to the upside, right? That's not necessarily what I mean at all, because we would need to break above the 480 level, support near it, and then continue upside, with our 20 being underneath. I don't see that playing out just yet. But what I mean by a V-shaped recovery is we had strong sellers on the downside. It's not out of the woods for tech to have that little bit of a bounce. It doesn't necessarily have to have a whole 100% retracement, but definitely a push up, a quick push towards the upper bounds of our relief bounds here, you can call it. Our buying channel is going to be more of a relief bounce, a controlled buying. It's not out of the woods for us to have that push over there. And then start to create more of downside here. However patterns play out, we'll look at it day by day. But I just wanted to point that out, that even if we do have some type of miraculous V-shaped recovery is still not out of the woods for that 480 level, 478, 480 level to be that rejection that we're looking for further downside. So as far as upside and downside, you still have that area as a target, especially with the lower bounds of our weekly range here, right? So around the 475 level. So if we do even have a bounce here and start to reject out of there, that's also very possible. So let's see how the week goes. Like I said, we're gapping down, so I want to see if we have any recovery out of that gap if we do fill the gap at open tomorrow. As far as our IWM, quickly run through IWM. IWM has just been, let's look at the weekly. Similar to SPY, we have the same situation going on here. Unlike SPY and QQQ, we've already had that rejection of our 200 once again, and refusing to hold over it. Once again, another rejection near the range here, a confirmed rejection here, and now we're kind of sitting in the middle of it, our 5 and our 20. So this was our bigger confirmation for the continuation on a downtrend. And then now we have not only our 5, we have our 5, our 20, and our 50 all pointing down, all breaking out of our 200 SMA. So unlike SPY and QQQ, where QQQ was sort of heading down, SPY was still kind of fighting it. IWM just gave us clues after clues of this strong downside, right? Even any upwards momentum, let's look at the channels we drew out here, any upwards momentum that we were looking for, like a rejection here, like we were mentioning around the 209 area last week. If we finally got a break out of our strong selling, so we had week after week of selling, week after week of selling. Once we had a break here, I was just identifying sort of a smaller flag breakout of this range here, and we were looking for any holds. If it closed over 209, we were looking for some tests around the 200 or even the 50 around this range here, around this range here, and we didn't get that, right? So we didn't even get the hold over the 200. It was a very slight bounce. It was not too strong at all. We did have the breakout of our weekly bear flag here, but it was not as necessarily as strong, similar to how we had it this previous week here. With IWM, it's much more slower moving. So I would, instead of looking for the Blair flag as a confirmation, what I would like to see is one continued rejection of the 20 SMA, but also us developing another selling channel here, right? Where we have another 2 weeks of price respecting an area. So let's see if that's the case coming in. Ooh, I did not mean to do that. And similar to our QQQ and our SPY here, we have that bearish engulfing candle that definitely took out our previous 2 weeks of price range. We have a little bit of room left on the bottom end, but us closing underneath our weak pivotal point here at 202, that was our big confirmations last week. I wasn't looking too much for the upside, but I did mention any pushes under 202 is going to be our nice confirmation for some downside. We didn't get too much of a push. I mean, we did get a $2 push, but compared to, SPY and QQQ, there was much more of a drastic move there. IWM was kind of fighting price for quite some time before we finally got that flush to close on Friday. So that's kind of where we get this inside range here without too much of a larger wick. But yeah, if we start to break underneath this 200 level, IWM is very, very big on psych levels. So I have it here as a big pivotal point here. So if we start breaking under the 200, I would look for some more downside. We do have our expected range around the 184 area. So but I would target more towards the 196 and the 194 area, right around here. Just a good sweet spot. Why is that? That is because we have several bounces in this area, right? Several bounces around this area where we're having look belows and pushes over. Once again, same thing. This was a previous area of rejection. So I don't see the 196 area being given up right away, um, it might give us that small bounce, and it might give us what we're looking for the SPY and QQQ slight recovery, right? We might have the IWM push here, give us that slight push on SPY, to give us that push towards this, for at least for the IWM, we're looking at a rejection near the 200. For SPY, we're looking at the 561 rejection. So I'll look below here, a breakout of our selling here, continuing to hold out of it, and a bounce near the 197 level, giving us another rejection here, is not out of the woods. So let's see if that's the case this week coming. Let's take a look at the daily. Nothing too much for the daily. Like once again, like I said, we do want to start seeing price holding underneath the 200. If IWM was under the 200, I'm just gonna safely say that it's inherently bearish. But you do want to start seeing the 5 starting to cross below our 20, so we know that this small uptrend that we've had here has confirmed failed. So yes, we did have some downtrend, but our 5 has not gone underneath our 20 SMA just yet. So just be on the lookout for that, because if we start seeing it break below, that'll give us our short-term bullish, our short-term bearish change of trend. So that'll be a stronger confirmation for any down. So I believe it would open near it. So I'm curious to see if we do have a rejection near it. That would be even better. And then as far as pathing, there isn't too much to say here besides last week we were looking at a push up here, and they were at 32. We were closed. We were right around the bottom end of a 32, and I was mentioning that if we do have a push, I would like to see a rejection near the 50 on our weekly downtrend. Because our flag can go up to about 50%, right? So we can have a flag that sort of looks like this. So we have a little bit of room for us to have a push up. We didn't get that, which it's fine because it still confirmed our rejection near the 209 level, which is where I was mentioning that if we do have any upside, I would still be cautious near the 209 level. So as far as IWM pathing, it's really going to be tough to say. The one thing I'm going to be looking for, once again, similar with SPY, here's our buying as well. I'm looking to see if we create a pattern similar to SPY here. Maybe we have our test near a 200 here. This is where we're getting that 200 test. Create another shoulder here and break down, right? Could be something like that. Terribly drawn, apologize, but that's kind of what I'm looking for, and a confirmation break underneath here. It's kind of aligns with our 200 level here. So we start seeing a break under there, then we know that we have further downside, especially since we have our recovery here, a bounce recovery, right? So it doesn't, I mean, it could go a little bit lower than that. We can have as a recovery in the smaller end of the range, and then start to push down. And that's totally in possibility. I would rather see a rejection near the 202 level and confirm underneath 200 for further downside. So I would be on the lookout for that as well. And then, I mean, we can go through our sectors, but if anybody has any questions, this is a good point for us to stop and answer any questions if you guys have. Tell me if I'm going too fast.
Hey, Smoove. You're right.
Yes,
I have a
sir.
question for you, real quick.
Yes, sir.
So, what parameters do you have for when price breaks out of your trend channel?
Okay, so there's a few things that I look for at least if it's on a larger time frame. Like, I mean, it could look below, as you know, with let's go to like SPY, so it's a little cleaner. As you know, with price action, you never can really look at a level as like a full failure support, right? It usually does that break, retest, confirmation, right? But what I look for, at least for the larger time, on a larger time frame, I mainly look for the 30-minute break in structure. So I have a few channels here I drew out. The main thing I was looking for on the weekly, I think I have it on another chart here, my other area, my other lines here, but mainly I look for a break in our channel, especially on the 30-minute. And my targets on the downside are usually just large volume nodes, right? So that's where all my levels are. I look for large volume nodes because a break in structure, a break in trend, similar to this, like this is our bear flag that I was looking for. A break of this, our next target, it's going to be our next large volume node, right? Which is around the 446 levels, 443 level. So like any downside, that's kind of where I have that target for the downside. I'm hoping it answered your question, but
No, you did. So you're saying the parameter you said is once you get a 30-minute closing below or above your trend
yes,
channel, that
yes,
is when you're gonna take a position. Am I
yes,
correct?
yeah. That's when I take a position and hold, right? Like if I'm playing futures, I'll have like several smaller channels building out, right?
Uh-huh.
But when I'm playing, let's see if I have. I'm gonna pull up my other chart here, right? So let's pull this one up, right? If I'm playing on a smaller break-in a trend, I drew these out because I was talking to someone. Let's draw these here. Okay, so when I was looking for, like, let's say last week, I was looking, we had a gap up here. This is actually something I personally traded so that you guys can kind of have an
Okay.
idea. So I was looking here when we had this gap up, right? So previous Friday, and we had this gap up on Monday. I wanted to see two things, two different trends playing out here, right? I wanted to see one, the yellow here signifying more of a weaker buying, right? So there's no strength over this range, or an orange trend building out, which is going to be a stronger buying trend, right? So a stronger trend on the upside. So I waited for that, and then I noticed once we had the break here, I didn't want to inherently short right away. I wanted to see a rejection near this area here, to give me. I was looking for a smaller head and shoulders pattern like this on the 30-minute. But to confirm that this was going to be the shoulder, right? Because it kind of looked like an equal body, right? Confirm this
Correct.
was the shoulder for me was I wanted to see a strong selling starting to develop. So once we started to break out of this and we had that rejection around here, which is pretty much the rejection of our buying, right? So this is break of this was confirmation that bulls were no longer in control. But I needed to know that. So I know the bulls are no longer in control, but now I need to know if the bears have built confidence. And how do I know that? I look for some type of strong selling that's gonna hold and respect our previous rejection trend line.
Okay.
So that's what I was looking for, right? So, and everything there corresponds with that 200, right? So our 200 SMA was here. So for me, you could easily short this. That's not what I was looking for. For me, I wanted to confirm a rejection near the 200 SMA. Once we got that rejection of the 200 SMA, it corresponded with our break and our yellow weaker buying channel, right? So we started to break out over there, and this was a trade that I took and I caught it towards the bottom end of the channel. I did not catch the whole move because I literally look at my next target is my next selling channel. So I always look at my trend lines. I don't over hold my moves, but I do look for breaks in here. So my exit was around here, and then this was Wednesday. I did quite a bit of forceful trading, so I did not have a really good Wednesday because, as you see, these bodies sort of filled. So I took a step back. I know Wednesday you probably all saw it just kind of flush down, but you could still lose in those kind of days, and I honestly did. But on Thursday, this is where I kind of recovered that, where I got a break back into this channel here, a recovery bounce here. So I was looking for a recovery bounce out of this downtrend. But one thing I wanted to see was, if I zoom out a little bit here, I wanted to see if this area of rejection would be a new area of liquidity grab for the bears. So I wanted to see if any push up continues to reject outside of this range. So any pushes up, it's going to grab liquidity in this range. What does that mean? That means in this area here on this trend, bears are basically essentially placing sell orders, right? So this is where any liquidity is being grabbed. So anytime we're on the upside, and the confirmation of that is one, a rejection with strong red candles, rejection with strong selling. And this is an even further confirmation because we had continued selling. So right here is where I took my second trade of the week. Was once we broke back outside of the channel, I sort of I was playing futures, so it's realistically somewhere here, like in the middle of this, but it was a decent
Okay.
move. And then my second play of the day was the same thing. This was later in the day. I think it was around like right before close, like 2 o'clock, 1:30. We had that last hurrah push up, and then once again, bears grabbed liquidity. So stuff like that, I would be looking for to take my exit, and I look for those 30-minute moves. Those are the ones that I really hold. The smaller moves like these, like I said, just continued selling. Those are more of me just getting in and out, in and out once it starts to reject.
Okay. All right.
Hopefully
Makes
that made
sense.
some sense. Yep.
Oh yeah.
Alrighty. Any other questions from anybody else? Alright, if that wraps it up, I'm going to go ahead and end the recording.